first welcome our guest on board, Mr. Abhishek Basu Malik, the co-founder and fund manager of Sri Rama Managers PMS, now joining in on the program with us. Warm welcome to you, Abhishek ji. Good to have you with us yet again. Help us understand first your take on the overall markets after 2 to 3 weeks of marking positive moves week on week for the markets. Yet again, we constantly feel that the resistance still is at play. We are not getting a chance to go beyond 25,400 or 25,500. That still remains to be seen as to what will be the key trigger. What are you penciling on? Do you think it's the earnings season that can actually drive further momentum for the markets from here?
So, first of all, good morning to you and all your viewers. I think, like we discussed last week, the market is stuck in that range, 1,000 point range on the Nifty. And my sense is that uh, the earnings season is not going to give sufficient fillip to the stocks in the market. So. Uh, it's more going to be the commentary rather than the earnings that will be determinant of how the market behaves. And obviously, the market is not, like this because of the numbers. It is like this because of extraneous factors. And if tomorrow or sometime there is a trade deal with the US, you will suddenly see the market mood completely changing and market galloping from here if the trade deal is reasonably favorable to India.
Okay, got that. Well, it's 9 a.m. Let's quickly look at how the markets are trading. Well, fantastic pre-open tick. You can see a 300 point of an uptick on the Nifty 25,515. We could have just probably looked at this and thought that, this is the reality. But I think this will settle, and we will have to wait out for some more minutes to find out, where the final move is. Right now, a percent higher. That's reflective of the big move, on the D Street. Let's actually wait it out to see how this settles down. But let's actually pull up some IT related stocks. Let's pull up HCL Tech. That's the big number that we will be watching out for because of the earnings that have been posted sequentially. Remember, IT stocks have been in focus for some time now. Remember, revenue is up by 5.2% for the company at 31,942 odd crore rupees. We've seen EBIT improve by 11.3% as well. We've also seen the EBIT margin up by 94 basis points for HCL Tech at 17.22%, and we've also seen the net profit up by about 10.2 odd percent, coming in at 4,235 odd crore rupees. LTM attrition at 12.6%. When we talk about the new deal wins, they are at $2,569 million. That's up by 41% on a sequential basis too, and a 15.8% jump on a year-on-year basis as well. Let's try and understand the mood on the IT space with you, Mr. Basu Malik. First, it was TCS. Now it's HCL Tech. How are you looking at these two numbers that have actually come in? What has stood out for you in the earnings?
So I think, like I just said, the commentary is going to be more important than the numbers because the numbers are slightly better than expected. Nothing, to write home about. But the commentary is probably slightly, again, better than expected. I think with the and I think HCL Tech for the first time started reporting AI numbers separately. So that's a positive, and it is going to be a direction for other companies to do the same, and which basically means that now there is going to be a lot of focus on how much revenues is going to come through from the new AI or the AI vertical. And when you start reporting these numbers internally within the company, there is a lot of focus to drive growth in those numbers. So directionally, I think it's a positive because I think if you look at the Indian IT services companies, they've been sort of falling far behind Accenture and their ilk in terms of uh, servicing the AI customers in their customer base. So I think overall it's a positive for uh, HCL Tech, and let's see how the others start reporting. But I would see that as a positive.
Okay, you would see that as a positive. Do you think this could also be the beginning of, a positive move on the IT sector? It's been one of the worst performing sectors of 2025 with the underperformance that they have displayed. Of course, there were a lot of uncertainties that they have dealt with and the earnings weakness. Now that the commentary, like you pointed out, is better than expected, numbers are coming out better than expected, it could just be a matter of one more quarter when things are back on track and on the moving space then. And do you believe then now is the right time to start looking at IT yet again?
Definitely, I think we should be looking at IT, but my sense is that the mid cap or the more niche players within IT space would probably do better compared to the larger ones, which are much more diversified and frankly much larger. So looking at the mid cap, small cap IT companies would probably be a better idea than to look at some of these larger ones.
Okay, got that. So that's as far as the IT space is concerned. How are you looking at the banking space at large, Mr. Basu Malik? Last few months and quarters, and this entire year also, if we talk about among the large indices, it's the Nifty Bank that's outperformed. Others have been absolutely flat, like Nifty, Sensex. When we talk about mid caps and small caps, they've actually virtually given no returns this year. But it's the Nifty Bank that still managed to pull up in double digits, about 10 odd percent year to date or basis. How are you looking at the banking space? Do you think the outperformance will continue?
So I think a large part of the outperformance of banking had to do with the rate reduction, and if I look at the inflation that has come in last the latest one, that is also significantly lower than the RBI band of 2 to 4%, right? It's lower than 2%. So RBI does have the opportunity and the space to reduce rates further. Uh, Probably they are holding back just to monitor what the trade deal and the tariff etc. Scene is going to look like. And if we get a further rate cut, again, it is going to boost uh, the banking sector. It is going to boost the consumer sector. Uh, it is going to boost credit. So overall, I think and if I look at the MFI space and those areas, NBFC, MFI, I think they are also sort of getting out of a slightly bad phase. So overall, I'm pretty positive on the banking, NBFC, MFI kind of space.
Okay, fair point. Now, let me also ask you on the broader question on the macros improving, Mr. Basu Malik, and what does that mean for the overall economy? And then we can again come back to some stocks and sectors when the markets settled in the pre open trade. Inflation number at a 99-month low, coming in at 1.5%. 7 straight months when it has remained below 4%, and now it's also slipped below the lowest band of the RBI comfort band of 2 to 6 odd percent. Now it's at 1.5 odd percent. Food inflation in the negative territory. How are you looking at this? Metric, and what would this mean, and does this also have to do with the GST cuts, with the kind of reflection that we've got in September?
Uh, there might be some relation with GST cuts because overall the prices of goods would have reduced to an extent. But largely, if you see, inflation in India is driven by mainly two things. One is food inflation, and the other is fuel inflation, right? Crude. So both food and crude, prices have not moved upward significantly, which is why you see that inflation is tapering off. And with very good monsoon that has happened. In fact, in a lot of places, we've had more rains than was expected. Overall, I think food inflation is going to be benign for some time, and if that happens, then inflation could be around this 1.5 to 2.5 range for some time, which ultimately that is going to be a major benefit for the economy.
Okay, and with this kind of a print, what do you expect the RBI to do next? It's been holding its power for some time now to keep status quo on the rate front. Do you think this will further urge the RBI to cut rates?
I am not sure because I think the RBI may hold out till the tariff situation is clear. Because
Okay.
what if you see what the RBI is now doing is, they are not tinkering with the rates, but they are more focusing on liquidity, right? So they are doing more of liquidity management than tinkering with the rate. So I might, they might continue doing so, or they might just try to look at the currency side of things. So a lot of things to be done, or that is being done by the RBI behind the scenes. Uh, Rate cuts, my hunch is they might wait it out till the tariff situation is clear.
Okay, got that. So the RBI could be holding up. Let's actually look at how the markets are reflecting the move in the pre-open trade. Now it's already 9:08, and let's see how things are settling in the pre-open. 25,277, a 50 point of an uptick on the Nifty. When we talk about the sectors, it could be IT, it could be metals that could be hovering higher, even real estate and some broader market names also that could be hovering higher. I think only we are given to understand that the Nifty Bank could be opening softer, but it could be a broad based move on the positive side, at least what is being indicated from the pre open trade. Among the top movers, you will find HCL Tech. After the earnings, it settled about 1.3% higher. Apollo Hospitals could be opening 2.3% up. Eternal Hindalco, ICICI Bank could be some of the other moves that we could be expecting to see as well. But apart from the secondary markets, it's also going to be the primary market that will be in focus today, viewers, because LG Electronics will be debuting on the D Street as well. Remember, the IPO had got 54 times subscription as well, so it's also breaking a lot of investors' hearts because the allotment would have not gone to as many people as they would have liked it to, and the grey market premium in the unlisted market in the unregulated market is indicating a 38% kind of a pop. At 9:45, we will get to see how the stock is getting settled on the BSE and NSE, and what kind of a listing can we expect. Will it be a big listing pop? Will it be a higher premium at this point in time is what we will wait to find out. But let's try and understand from you, Mr. Basu Malik. Tata Capital was seen again as something that was disappointing on day one at least. And LG Electronics, on the other hand, it had seen much higher subscriptions, it had seen much higher demand right from day one. And help me understand what's your view there for those who have got the allotment. Should they just take the profits out and probably look at that listing pop as the gain that they should enjoy? Or is this a stock to be held on to? And for those who did not get the allotment, could listing space be, that they should be looking at?
So normally, you're aware, I don't like IPOs.
Yeah.
Uh, this is a one of those probably very very rare exceptions where I think this is a great company, one of the market leaders in India, and very very established for many years. Right, probably 25 years they've been at the forefront of the consumer durables market in India. Very very good products, and I would be very surprised if it does not get into the mainline indices like Sensex, Nifty pretty soon. So anybody who's got allotment would be they just need to sit on it. I mean, you don't need to just do anything. Uh, my sense is that it's going to a lot of institutions would want to buy, so there is going to be definitely demand for the stock for some time to come. So I don't see uh, you know LG Electronics sort of falling after listing uh, like a lot of other IPOs do. So there is going to be, in fact, I would say even from listing, there is going to be upside in the near term as well as in the long term.
Okay, got to understand this as well. It's 2 minutes to go before the markets open, and of course, all eyes will be on the secondary markets. We will, of course, come back to the primary market space at 9:45 again to see what kind of a listing can we expect for this one as well. But you've definitely got Abhishek ji's view on this one. What about Canara Rebecco? Have you looked at that one? Today is the last day of the IPO. Since you did say that IPOs is not a space that interests you too much, but Canara Rebecco coming from a big conglomerate again, global parent.
Again, I think this is a space. If you look at, I think Canada has, both the AMC as well as the insurance company IPOs happening, and I think both are interesting. Uh, Not because of the company per se, but the overall space. Because I am personally very bullish on the financial and the wealth management space in India for the next 10, 20 years. Because if I look at the demographic, if I look at the change in pattern of savings and investment that is happening over the last 5 to 7 years, I think this is a space where we are just getting started. So and we've seen how the listed entities in this space, especially the wealth managers, the AMCs, have performed over the last few years. So, long way to go. I think, the these are good companies. So, whether you want to, go for the IPO now, or you want to wait it out for a couple of quarters, like, what I tend to do normally, is up to an investor. But these are good options to get as, secondary market investor a few quarters down the line.
Okay, fair point. Let's start looking at the markets and we'll come back to the conversation then. 25,291. So we do have a 70 point of an uptick on the Nifty right at the opening tick, viewers. Now at 25,300 odd level. So you are seeing a 0.25% of a jump on the Nifty. Sectors, barring financial services, the Nifty Bank, rest of all the sectors are actually opening higher. Metals are shining the brightest. You can see almost 1% uptick there, almost a 1% uptick even for the IT space as well. HCL Tech is opening in the positive zone. You can see 1.6% move on HCL Tech, now even higher, 2.5% higher. It's the top mover now after the earnings have come in at 1530 odd levels. Following this is Tech Mahindra ahead of numbers. You can see 1.5% move there. Tata Steel is up in trade too. You also have Hindalco from the metals pack that's also shining bright. Infosys from the IT pack. Then you also have Eternal that's among the top movers. So metals, IT, oil and gas, realty and the broader markets also hovering higher in trade, at least at this point in time. What is dragging? Well, you have names like, of course, HDFC Bank, you're looking at Titan, you're looking at Dr. Reddy's, Interglobe Aviation, Maruti Suzuki as among those top laggards in trade. Any moves that we can spot on the top gainers there when we look at the broad Nifty 500 names that we can mark out for our viewers. Landmark Cars is up by about 6 odd percent. There's also this news flow of the updates of the sales that are coming in for the company that have really led to this move today. Some of the other smaller names that are also up and about, but we'll give it some time before we do see. Tata Investment Corp is another big one that's actually moving on the broadest index, but many others are just small names, and we'll come back to it in a bit. But let's quickly look at understanding from Mr. Basu Malik, what about the metal space, sir? Why do you think that's shining bright? Why are all the technical analysts believing that this is going to be the year that we should be watching out for metals outperformance? Clearly, precious metals have started it, and that it should follow through into the hard metals as well. Do you think fundamentally also metals is getting into a structural move on the positive side?
It's very difficult to take a call fundamentally on metals because ultimately it's purely a demand and supply game, and also it has a very high dependence on policies, on tariffs, on taxes and things like that, on duties. So very difficult to take a call on overall metals, but definitely what we are seeing is a sort of a crazy run in silver, in gold, in platinum, copper. So I think there is definitely a shift away to tangible real assets, and metals is one of them. So obviously that is where the trade is happening. Whether it is fundamentally sound or not is something that I have honestly no clue. But is it good for a trade? Definitely yes.
Okay, let's also welcome Arpit Beriwal, analyst for derivatives wealth management at Motilal Oswal Financial Services, now with us on the program. Hi Arpit, good morning to you. Your sense on the markets, they've opened up on a positive note, about 60-70 points higher, nearing that 25,300 mark. Do you think up in the run up to Diwali, we can actually go ahead and yet again make an attempt to retest our erstwhile highs? Do you think that's possible, or will it be in a range?
Having me. So if we talk about first the headline indices, if we talk about Nifty. So Nifty, if we see from last couple of months, since August almost, Nifty has been trading in a broader range between 24,400 to 25,600 levels. And this has been that perfect kind of a time correction that we have seen in last almost 1 year, where our sense is that index is likely to consolidate with a higher base and stock specific action is likely to continue. So ongoing result season is definitely likely to trigger the momentum. But our sense is that Nifty, the major hurdle will be around 25,500 levels. That would be a key level to watch out for. And any sustenance or monthly close above 25,500 would only trigger the fresh highs towards 26,000, 26,200 levels. In the meantime, we expected to consolidate with a higher base. And now the higher base has shifted from 24,000 to now it shifted to 24,750. So I sense the overall bias will be positive with major support around 25,000 for an upside move towards 25,550, 25,600 levels. Now, if we talk about Bank Nifty, so Bank Nifty has been relatively outperformer where we have seen stock specific action. Bank Nifty is just couple of percentage low from its previous all time high. And looking at the setup also of Bank Nifty, definitely Bank Nifty can scale new highs. This week we have HDFC and ICICI Kotak result on the coming weekend. So look at the chart setup wise, 56,200 is a major base for Bank Nifty. Until it holds above this levels, we can see an upside move towards 57,000 and then previous all time high near 57,500 that we can see soon in Bank Nifty going forward.
Okay. Any two stock ideas, Arpit, very quickly that you can mark out?
Yeah, so there are a couple of ideas. So first would be from the AMC space, that is the NBFC space, AB Capital. So if you look at the chart structure of AB Capital, the stock is in secular uptrend. The nature of the stock is quite strong on the monthly and the weekly setup. So from last few days, we have seen some corrective move from 311 levels, but on the daily scale, it has negated the formation of lower highs. Risk reward is quite favorable. We can see upside move towards 315, 320. Second would be from the capital market space, that is CDSL. So capital market theme has again back into action, and if you look at the chart setup of CDSL, CDSL has been consolidating on the weekly scale from last almost 8 to 9 weeks, and a sustenance above 1620 has definitely triggered the breakout zone above 1620. The stock can head towards 1700, 1720 levels positionally. So CDSL and AB Capital would be a preferred pick for the coming week.
Okay, got that. We'll definitely keep an eye out on these two stock ideas for all the traders who've been watching the show to look at some early moves there, what one can participate in. But Abhishek ji, coming to you, and now I'll talk to you about the Tata Motors demerger that's now into effect, and all those people who have got Tata Motors shares in their demat accounts as of today will now be looking at the adjustment that will take place. Since the Tata Motors shares will be adjusted for the demerger of the commercial vehicle business today. Today is the record day, and the passenger vehicles business will now be called as Tata Motors Passenger Vehicles, or TMPVL. That will consist of the domestic passenger vehicles business, Jaguar Land Rover, stake in Tata Sons, Tata Steel and Tata Technologies, along with some other investments. And the demerged commercial vehicles unit will consist of the domestic commercial vehicles business, Iveco business, whose contribution is not accounted for in the targets that we are looking at this point in time, and the stake that it owns in Tata Capital get. Now, the big question is, how will this be valued at? Nomura has valued the commercial vehicles business at 365 rupees per share, and it has valued passenger vehicles entity at 367 rupees per share. The brokerage believes that post the demerger, the price target for two entities is almost split evenly. So let's try and understand from Mr. Basu Malik. Could you help our viewers really understand what's at play here for those who've been existing Tata Motors shareholders? What should they expect for, of course, there'll be one additional share that they will be looking at. So what should they expect in terms of the prices there? And for those who may be now looking at an opportunity to participate in two different businesses with their own thought, how should they be proceeding?
So, actually, I am also in the process of understanding how the two demerged companies is going to be, what value to attribute to both of them. But structurally, there are two things. One is the challenge today in the Tata Motors business is more in the passenger vehicle business because of Jaguar, right? Because of JLR, because that is where the stress is coming from. The opportunity also is there because of the migration of both JLR as well as Tata Motors to the EV space. Because if you look at Jaguar, their sales have been down drastically, not because they are not able to sell, but because they have made a commitment to transition to EVs. And as and when it happens, say over the next 1 or 2 years, the sales of JLR is going to go up. And in India, already Tata Motors has been a market leader in EVs. Uh, with more time, I think adoption in EVs is going to increase in India. So, and they are the incumbent market leaders. So, both the risk and the opportunity is there in the Tata Motors passenger vehicles company. For those who are more interested in uh, the commercial vehicle, I think commercial vehicle is a very steady state business that Tata Motors has. India, Africa, etc. They have a very strong business, and now with Iveco coming in, I think it is going to get better. So, but it is not going to grow as fast as the passenger vehicle business over time. So I'm yet to actually figure out the valuations that need to be attributed to both these companies. But the characteristics of these two companies are different. One, the passenger vehicle is more for people who can stomach a lot of ups and downs, and the other one is probably more for people who want a stable, reasonable growth.
Okay, got that. I'll also ask you, Arpit, technically, how would you advise on Tata Motors today since day one of finding out the value for each?
Sakshi, if we see overall, if I along with the today's structure, if you look at the bigger time structure, auto index where the auto index their life high territory, Tata Motor has been a huge underperformer from last couple of months. And if you look at the immediate chart structure of Tata Motor also, sustaining level says that 700 720 is a major supply zone for the auto for Tata Motors particularly. And until that, the stock is likely to consolidate within the range between a broader range between 620 to 720 is the broader range for Tata Motors. And technically, I think right now the underperformance is still there. We have better pockets within the auto basket where we can see more outperformance, such as M&M, TVS Motor, Hero Motocorp. So our sense is that it's better to wait for some cool off and better that the corporate action let it settle and we'll get better opportunities. But however, we have better opportunity in the auto sector with the likes of TVS Motor, M&M, Hero Motocorp. So we'd like our clients and traders to go with the better outperforming counters within the auto basket. And for Tata Motors, better to wait and watch, wait for some stability, and then only enter fresh positions from a longer time view.
Okay. Mr. Basu Malik, most of the brokerages have penciled that the listing of the CV business could take place only after 1 to 1.5 months or 30 days to 45 days. Till that time, should one be really looking at even the passenger vehicle business at this point in time? How would you advise?
It depends on whether you are interested in the passenger vehicle business. Like I said, it's the passenger vehicle business is the one which has the higher risk reward. So if you're interested in something like that, and if you can hold on for maybe a few years, then passenger vehicle business could actually give you decent returns. But you know, it's not something that is going to be a linear upward kind of movement, because the JLR component of the passenger vehicle business is something which can upset uh, the entire equation altogether.
Hmm. But do you think that the recent GST rollout that has happened of the rationalization, that do you think has provided some kind of a tailwind to the passenger vehicles business of most of these companies, which has been so far lagging, and therefore premiumization as a trend, has probably picked up pace. Those who had a certain budget for themselves for the cars or the vehicles that they were to buy, and now you have a high, higher car or a premium car, which may be now on a similar budget available to you because of the GST cuts. So, how are you looking at that trend play out for the PV business of auto companies, including Tata Motors?
So, GST is definitely going to help, right? But the challenge is that GST is only for the Indian business. The moment you look at the global, passenger vehicle business, including JLR, right? There, there is no impact of GST or anything else, right? There, it's primarily what is happening all around in the world, in UK, in Europe, in China. That's where their biggest market is. So there are things which are happening. So luxury tax threshold has been cut in China. So uh, that can impact JLR. Overall, that the point I'm trying to make is JLR will actually make a big difference, both upside as well as downside in the overall passenger vehicle business. So it's not just what is happening in India, which is not the case, for example, in the other listed auto players like a Hyundai or a Maruti, etc.
Okay, fair point. Now, help us understand, Mr. Basu Malik, if I have to ask you towards the end to give our viewers a sense of how to play the markets from this festive season till the next festive season. How would you advise them? Have you penciled in a note for your own clients for this Diwali, for this festive season, with a list of sectors that you are betting big on to play over the next 1 year, and the key stocks that one should be really looking at adding to their portfolios in this festive season if somebody has to start off by creating or rejigging their portfolio? How would you advise them?
So I'll be, probably slightly contrarian and
Okay,
say that, you know, we might be headed significantly higher in the next 1 year.
okay.
That is my base case. Uh, Next 1.5 years, my sense is we are looking at a Nifty of 32,000. If that happens, then there is a definite possibility that there are a lot of small and mid cap companies who will perform splendidly. Uh, my take would be to continue to focus on domestic plays, whether it is through engineering, capital goods, you know, uh, data center kind of themes, uh, power, electrical, the entire space which is related to the infrastructure input of the country. Railways again is coming back. Defense is going to do well. So huge opportunity space in India. I think what we saw over the last year was more a pause in the long-term bull market. My sense is that we are somewhere, probably in the first stages of getting into the next leg of the bull run. So, uh, at least that is what I'm telling myself. I continue to remain bullish all the time, which is not good, but that's the way my mind works. And my sense is that we will be significantly higher next summer than this one.
That's a good optimistic note to end with you, Mr. Basu Malik, and of course we'll catch you around Diwali as well. But of course, season's greetings to you and to your loved ones at large. We'll catch you around, and we'll hope that this optimistic note definitely comes true. It's been really long time that investors have been waiting for some kind of an outperformance to return to the D Street. Virtually no returns on the index level has disheartened many of those first-time investors who were only used to of seeing that the markets only go in one direction. That's on the upside as well. Thank you so much. Appreciate your time.
Thank you. Thank you.